Well, let's get to our first topic of discussion on the show today. Nigeria's manufacturing sector remains crucial for its country's economic transformation, for any country's economic transformation, with the potential to create jobs, stimulate innovation, and drive economic growth. However, the sector faces significant challenges, including high production costs, foreign exchange scarcity, of course, and macroeconomic challenges. Experts say the sector requires a comprehensive overhaul to address the lingering issues and unlock its full potential. But what are the opportunities amid these numerous challenges facing the sector? Let's get talking now. I'm being joined by the Managing Director, Chief Executive Officer, Coleman Wires and Cable, Mr. George Onofo-Walker. Thank you so much. It's good to have you in the studio.
Thank you for having me.
Yes, just like I said in my introduction, I want to start with Coleman. Incorporated in 1975 and started production in 1996.
All right.
How's that journey been? Tell us, with all of these flip-flop policy issues, how's it been?
With any business that you start off in Nigeria, you have your ups and downs. But for me, I always look at it, never look at the negatives. Because if you look at any negative in Nigeria, you fill with, I think you can fill an old glass and an old jug filled with negatives. For the journey for us, it has to be first optimism. For any journey in Nigeria, for you to be in manufacturing, you need to be optimistic. And when you look at it, you're going to have your knocks, but the optimism and the positive optimism take you over the knocks. And for us, for Coleman, it's been a micro small business start-off that we're a second generation. I'm a second generation, proud to be. And when you look at it from where we started from and when we entered the cable business, it's been a tough journey. And when you start a business with one or two machines and you've grown over the years to the largest cable company in the continent, not only in Nigeria, something must have happened. But in between those journey and in between whatever you've done, you actually need to know how to survive those Nigerian shocks, I call them. And we've had quite a few shocks, and most of the biggest shocks always happens when Nigeria devalues its currency, where most manufacturers lose a fortune. And you most likely will lose the total value of your business on that same day. If you can survive those type of scenarios, I think the likelihood you'll survive others will be easier. And so that for me has been that journey. But we remained positive. We believed as a Nigerian company, as a cable company, that it was an essential part of life because literally, I'll say 15% of every infrastructure built, whether your house, buildings, oil, telecom, you need to have cable in it. And if that is an essential part of life, and we're also in the industry where every Nigerians will tell you that made in Nigeria is better than anything else.
Yes, I was going to ask you that. I don't know why everyone says made in Nigerian cables are the best.
They are the best because no manufacturer, especially those associated with the Cable Manufacturers Association, has gone below the standards set by SON. You will never hear a Nigerian cable company supply cable to any individual or any business, and you hear a fire outbreak leading or coming out from that cable. So over the years, the Nigerians have realized that that is the only industry we can all shout about. So from your artisans to your consultants, everybody is looking for a made in Nigerian cable. And that was the standard set from onset, and that's the standard we've maintained till today. Now, so in that regard, it gives us something to hold on to as kudos to Nigerians actually standing out for something. And that's the same way we do some export. And I remember trying to push some exports to some countries, and they said, oh, you can't bring made in Nigeria here. I told them, it's not going to happen. It's either we enter that country with made in Nigeria or we enter in nothing. And eventually, we actually went in with a made in Nigeria, and everybody noticed. So if we are so proud of our products in the country here today, there's nothing stopping us to be proud of it anywhere we go. And so for Coleman, we've grown from a micro small to a medium size to a large scale and to an extremely large scale company. And I think fundamentally what we looked at was different. We looked at how can we solve and become the one-stop shop And the one-stop shop was a very long strategic 20-year decision to literally put back, I'll say, I insisted on we putting back 98% of our earnings back into the business for 20 years. We didn't take anything out. And it meant you only had 2% share. But it was a long decision. It was a long-haul vision, and it worked. At the end of 20 years, literally we have no competition in the continent. But it now meant you're big enough to actually throw your weight not only in Nigeria, but out of Nigeria.
It sounds very good. And when we talk standards, many would complain at the time that, we have issues with standards agencies coming into our facilities, telling us this and telling us that. How has it been with cable manufacturers dealing with regulators and, of course, agencies like SON?
I think agencies of SON have been collaborators rather
that's
than
good.
Agencies that create setbacks. Why? Because over the years, it's become a pride of not only Nigeria, but a pride of SON. Because it's the only industry that SON could say we could go anywhere in Nigeria and every Nigerian will be literally proud to actually say there's a product of quality made in Nigeria with an NIS standard that is made in locally. So it made the job of SON a bit easier. And it made the collaboration a lot better for the association and for the individual companies like ours. So over the years, that has helped.
Oh, good.
And I think it continues to help because of that same mindset. Because if you're sure of the product that is coming out of an industry consistently, you're less afraid of what is going on in there. The supervision will be there, but the consistency of the product line would mean that industry stands out continuously. And that becomes your pride. So for us, I'll say SON is a collaborator, an efficient collaborator for growth. You might have some other agencies that, of course, is not always, but for standard, I think SON has done it right.
Let's now look at addressing issues of substandards, adulteration, which, of course, one way or the other affects your kind of business. Correct. How is that being checked?
It needs to be done better. I think it's sometimes we tend to over-focus ourselves on one agency like SON to try and solve all the problems. But it's a multitude of agencies that literally stops those type of corruptions from the point of view of importation of the substandard cable to even localization of some of those products being produced substandard. It needs everybody's collaboration. Now, what happens in a substandard case? Now, you have a Coleman cable that is a good cable. You have your standard is 100 meters of cable. You know the most simple things. People don't even know what the standard of a coil in Nigeria is. Literally, a standard coil in Nigeria is 100 meters. It is not plus or minus. Let nobody make that error. There's no plus or minus.
Standard coil, right?
It's 100
I'm taking note of that.
If it's 1 meter less, it is no more a standard cable. You're not supposed to be short even half a meter of that 100 meters. A lot of people just don't even know. So most of the time they're buying substandard cable. It is 50 meters, 60 meters, 70 meters, but someone is rewrapping the cable. Now, for us, what we felt was the right direction. We've been fighting the market with the regulator, fighting everybody. But for me, I believe that it also boils to affordability. You need to make your product affordable. And for that to be affordable,
and still meet standards.
It's possible. The two things play hand when it comes to manufacturing: capacity built, economy of scale. Now, if you scale up so fast, you create an economy of scale that brings down the cost of production, whereby you can bridge down the power cost, the inefficiencies in the system, and bring it down, and then create that efficient production system that brings out an efficient price level. At that point, you can compete. The only reason why you might struggle after that is fiscal policy rules, whereby maybe the duty protection is not enough for that industry to cope with it, and then the government needs to then relook it. Most of the time we tell them, look, you need to relook some of these duty positions, fiscal policy positions to protect the industry. If you go to Egypt today, duty to bring in cables is 40 to 50%. But guess what? Egypt today has the biggest number of cable producers in country. because they did not make it easy for you to come in. Same thing happened in South Africa. If you find out, it's most of those foreign companies that actually ended up either buying or setting up because that country did not make it. 15% of every infrastructural spend in this country is cable. So why should we make it easy? It should be an industry that is extremely successful, extremely big. It should be as big as we have with cement. But what happened with cement we didn't focus on it the same way. We all looked at cement as if we solve cement, it will mean in-country production. It did. But we need to do the same thing in policy statement, in fiscal policy statement, to drive 15%. No matter what government spends in capital expenditure, 15% of all our GDP is going to end up in cable spend. So if you take that massive amount and you think you're importing it, the same way you look at cement, the same way we look at petrol and diesel, and we start focusing on cable like that, I think everybody will wake up at that impact of what you can literally generate in country if we do that.
Now, let's look at some basic economic issues that we face at the moment. Inflation is about 33%, above 33%. We also see that interest rate is on the high side, looking at what the central bank has done with the MPC meeting, trying to rein in on inflation. Now, all of this, one way or the other, will affect production. Correct. There's hike in the price of diesel for those still using diesel that don't have alternative sources. All of this would affect investments. How has it been?
I think for me, it's predict the right way a bad situation happening. Look, it was obvious. Think ahead of your projections and think ahead of a bad situation happening. Nigeria is not a place you set up business and only work based on, I call it fire brigade, which basically means work on an emergency solution to your problem today. You need to actually see your problems coming. Now, inflation has been going up, not today, it's been going up for more than a year or 2 years now. The reality is we had an imbalance between especially on the macro policies. The monetary policies were imbalanced. You had a low interest rate on savings, you had an high inflation, and you had a mismatch. Of course, it was happening. Now, the reality was that every person that was even vying for presidency or for government said the same thing. Subsidy had to go. Naira had to be converged at a certain point. So why should you be asking the question? They all said the same thing. Eventually, the party that won did it. So why were you surprised? I still find it difficult for people to be surprised. So for someone like me who saw it coming, we predicted it. So what we did was, in our case, which is what anybody else should have done. Right. The first thing, if you take off subsidy, is cost of transport will go up. Now, can I change my salary on that same day? Of course not. It's literally not going to happen. So in our case, we bought the same equivalent of BRT buses and bought 10 in one day. So the supplier said, I've been dealing with government. I've never seen a private sector buy 51-seater buses 10 in one day. Now, we bought it 3 months before the impact of, one, the FX position, and also, you can take your facility, and then we offer the buses to all our staff free of charge. Now, you get that scenario. By the time it happened, you took out the impact, because when we looked at the cost effectiveness, it was saving each one of them 30,000 a month by taking them back and forth on those on Lagos-Ibadan Express Road and on Shagamu Access. So everybody saw it, they actually thought BRT, Lagos had moved on to the Express Road. Now, but that was predicting what would happen. It's the same thing. Anything you do in business is to actually envisage the risk associated with your business, mitigate those risks, and try and plan. In Nigeria, for you to survive as a manufacturer, you need to be seeing everything that is going to happen 5 years ahead of it happening, and try and mitigate our policies, our situation, to try and manage the situation between the time it takes for that government to settle itself down.
Yes.
Now, the government has taken a little bit longer, but it's not too late to settle itself down. The policies now, it was to take off. For you to rein inflation, you must increase interest rates. Simple, basic economics. Now, the question is what next after you've increased the interest rate? Now, interest rate went up, MC, 400 basis points. Next thing, we had another 200 basis points.
Yes.
And it rained down a bit. Then they rebalanced the rates of the treasury bill rates and the bond rate. And you had the next set of people coming, which was FPIs.
Yes.
Foreign portfolio investors left Nigeria for more than 5 years, let's be sincere. Now, the first one came out in January. They came in droves. It was oversubscribed 300%. Now, we need, our reserves has a balance.
Yes.
It has a balance between our inflows and also the foreign portfolio investors. They've always played a balance of Nigeria's reserves. And now they're back in the game. We need them back in the game to balance. Now, I totally agree that the Naira was well undervalued. It wasn't 1,900.
So it wasn't appropriately priced.
It wasn't. I told everybody, I had an exposure, like every other manufacturer. We import raw material. I had an exposure in January. That was a big exposure in dollar terms. I literally refinanced it till May, and I'm smiling at the end of the day. And I said, look, that position between January, February, March was not the real value of the Naira. It needed, but the signs were there that they had started getting their acts together. The synergy between the micro policy and the macro was beginning to happen. Fiscal policy was beginning to get aligned with what the central bank wanted to do. And when you look at what happened at the end of January, look at the MPC movement, the interest rate, it started holding things down. Then the Naira started holding its own value because you took out a lot of liquidity out of the system. And when you look at it smartly, and people don't watch it very well, if you notice some of the bonds coming out from even the central bank and the budgetary office comes out after FAC. Immediately FAC is released, they realize they have a problem. A week after, they introduce a bond and they mop up the whole money.
Oversubscription.
So you need to take that Naira and balance it. And it helps businesses balance. We've struggled. I'm not saying there's no manufacturer that has not struggled. We've seen the negatives. A lot of them have lost on the FX-based devaluation. They've had exchange rate losses that are astronomical. But the question is, what next? And that is where I need us to all focus on. What next? For me, I always say, look, when there's a gap like this, we need to refinance a gap for all of us not to sack everybody. Now, I might be doing better because I planned this ahead of the situation. I might not have the same amount of losses. Mine is very minimal compared to a lot of companies in Nigeria. And I could take the heat, and because I planned for those heats. And for me, I'll say the company is doing better than we were. Now, but for most companies that did not, what do we do? How do we refinance this gap? And I always tell government, as much as it is not your job to run a business, it is your job to balance businesses, keeping people employed. And as long as manufacturers in this country employ the most numbers of people at work, we need to balance their books. Now, the same manufacturers are getting hit by high inflation, high interest rates. We know it's not possible to immediately introduce a low interest rate regime now because you have liquidity problems again, and then you'll be having a run on the Naira. So, fine. What else can we do? Can we have fiscal policy rebalancing? Which means, just the same way I said, why should a duty of a product we have enough people producing it in Nigeria be at 5 or 10%, for God's sake? It needs to be moved to a position where you can make. Then secondly, why are we not turning ourselves to a processing country? I'll take, for instance, 40% of the world's copper go to China. China barely has any copper sitting in its country. But 40% of the export and import go to one country. The whole world goes to one country. But what do? They process added value back into everybody. You're all buying your cable, your copper tape, your copper pipes. Everything comes out of that place. So what we need to do is start reconsidering how do we make Nigeria a reprocessing country. It is not everything that might want to go onto an EPZ zone. You might have some certain policies to also enable that certain raw materials that can be reprocessed in country should be enabled to come in even at zero duty. And we do have some of those chapters, Chapter 99, that allows manufacturers to play in that thing. You can vet, you can process. Then you can't turn us into the export zone. We're now under AFTA, African Free Trade Zone, has happened in Nigeria is part of the 14 today, and I see opportunities. I want to export.
I hope we take advantage of it, honestly.
I think we can. You know, when sincerely, I was not a big supporter of it at the beginning. Man was not. Eventually, 2-3 years down the line, we came back and said, yes, we're interested. Because now we all needed to go and review our position and say, this thing is happening. How do we reposition the businesses to actually take advantage of it? And I think Nigerian businesses are now ready to take advantage of AFTA, but the policy put in place on fiscal side of how we take advantage needs to be rebalanced to make sure that we are able to process in country and send added value. If I'm shipping out $1 billion of cable out of Nigeria, it changes the balance of trade of Nigeria with all those countries. And that is the same way we need to think about every infrastructure, every business that we do, that Nigeria can. Today, we are the only and the biggest producer of fiber optics, biggest producer in the continent of fiber today, which means every telecom line that you're going to do, the fiber production will be cables needed from Nigeria. Yes. And so how do we now make sure that I, as a business or any other business, can sell the same fiber optic cable to everybody in Africa and make telecom enabled? With everything you do, you have to look at the opportunities in Nigeria, the size of our capacity, the opportunities. We have gas. We have gas that can create power. Most businesses, thank God, they've deregulated power now, and that is helping. But we need to deregulate and also enable. Enable means the pricing of gas needs to be as competitive as the next door neighbor. So if I go to Ghana today, sincerely, I'll get gas at $3.50. But gas in Nigeria is $8. I still don't understand why. So
for a country with proven and unproven reserves.
Excessively proven and excessive. So we need to rebalance those gas pricing to make us also a bit more competitive. So if I'm processing, we're backward integrating, for instance. We're going to produce the biggest amount of copper rod in Nigeria with a 10,000-ton capacity per month. And that starts in a month's time. And I beg to ask a question. Why should I bring in copper that I can produce in Nigeria, export out of Nigeria, and export finished cable? That gives me 3-4 times the added value of the raw material. That gives me 3-4 times the import value or the value of the dollar into Nigeria. That gives me 3-4 times of anything into Nigeria. And you beg to ask the question, why should my power efficiency not be good? Which means my gas pricing has to be better. And we should not be in a case of until I know one particular government, one particular minister, before the enabling factors are there. The system must naturally allow businesses to piggyback on those enabling factors. And those are the things we need now, the fiscal policies, which they are doing. The Minister of Industry, Ngozi, is doing a lot better, and our team are doing a lot better. The finance team are doing. They're balancing what Cardoso is doing.
Of course. That handshake.
That handshake was not.
Yes, it wasn't there.
Well, I'll say in the last 3-4 months, we are seeing the handshake.
We have it.
Now, what they now need to do is find how to improve this handshake, that the enabling factors for the manufacturers, the cushioning factors, would then come in and allow businesses to restructure their gaps which has been created and get back in. We don't need businesses to leave Nigeria. We need businesses to get in and out of their problems and continue business in Nigeria, keep employment going on, and then increase capacity over time, which is what will make businesses like ours and others do well in this country.
I must say it's really interesting having you on the show. We hope to have you again to look at issues. Thank you so much. I've been speaking to Managing Director, Chief Executive Officer, Coleman, Wires and Cable, Mr. George Onofoko. Let me get a handshake. Thank you so much. Thank you for coming on the show.